US retail sales jump and give global stocks a boost. Australia's jobs rise is tempered by rising participation. The Philippines central bank cuts. China's domestic demand slumps, while Japan's GDP gets a consumer shot in the arm. That's coming up in our 5 Things in 5 Minutes. And then in our bonus deep dive interview, ANZ FX analyst Kausani Basak reviews PMI data to reveal which Asian economies are riding an AI tech demand boost.
The region's manufacturing activity has been resilient compared to US, Europe and the rest of the world.
But first, in 5 and 5 with ANZ, US stocks are up 1.5% to 2% this morning after US retail sales in July rose 1% from June, which was stronger than expected and much better than the revised 0.2% fall the previous month. US jobless claims were also slower than expected and industrial production fell, partly because of Hurricane Beryl. Here's ANZ economist Bansi Madhavani from London this morning.
When pieced together, the data are suggesting that the economy by and large is holding up strong. Our view is that we are likely to get a soft landing scenario and that warrants a controlled easing cycle. In that sense, the data does not indicate that the Fed needs to rush or catch up in terms of rate cuts. We continue to see a case for 25 basis point rate cut at Fed's September meeting. In the last couple of days, markets have pared back some of the overdone rate cut expectations. Currently, the markets are pricing 90 basis points of rate cuts in the year, and that's down from nearly 110 basis points cuts priced in just a week ago.
US Treasury yields rose 11 to 16 basis points, but the 2-year and 10-year remain below 4%. That powered a 0.5% rise in the US dollar index. As of 4 a.m. Sydney Melbourne time, the Aussie dollar rose on that more positive appetite for risk, up 0.33% to 66.16 US cents, while the Kiwi dollar was down 0.1% at 59.90 US cents. Number 2, Australian employment jolted higher in July with 58,200 new jobs created. That's nearly 3 times the consensus forecast. But rising numbers of people were also making themselves available for work, and that saw the unemployment rate rise to 4.2%. ANZ Head of Australian Economics, Adam Boyton, says that extra labour supply is helping to keep pressure off inflation.
The unemployment rate is really that balance between demand and supply in the labour market. That it continues to edge higher will provide, I guess, it takes some of the edge off for the RBA as far as inflation and the labour market's concerned. Yes, the strength in employment says things are running pretty hot, but the increase in the unemployment rate also tells us that actually a bit more slack is coming into the labour market. It'll be interesting to see how the RBA choose to characterise that when they appear before the Senate Select Committee on Economics later this morning.
Number 3, China's domestic demand side weakness showed through in a swathe of data yesterday, with annual growth in retail sales and fixed asset investment below 5%. ANZ senior China strategist Zhao Pengxing says there are 2 key reasons for the fall in annual investment growth from 3.9% in Q1 to 3.6% in Q2.
First is the property investment declined 10.2%. The second is the hot weather. Many Chinese cities, including Beijing and Shanghai, reported a temperature higher than 40 degrees last month. That was totally uncomfortable for outdoor construction. The poor investment data also suggests that more policy efforts will be needed to boost domestic demand in the economy.
Number 4, Japan's economy jumped back into life in the second quarter, with annualised growth of 3.1%, after a revised 2.3% contraction in the first quarter. ANZ FX analyst Felix Ryan says growth was led by the first positive contribution from private consumption since the start of 2023, something the Bank of Japan, or the BOJ, will have been wanting to see.
Definitely this is something the BOJ will be very happy with. For a long time they've really been wanting to see evidence of private consumption rebound, and this might be the beginning of it really, especially evidence of wages supporting that personal spending and generating that demand-led, services-based inflation, which has really been the goal for a long time of BOJ policy. So I think they'd probably be quite happy with what they're seeing now, and does support our view that Bank of Japan probably aren't done with rate hikes this year, potentially October.
Number 5. The Philippines Central Bank cut its key rate 25 basis points to 6.25% yesterday. Its first cut in almost 4 years. And it signalled another cut may be on the cards before the end of the year. ANZ economist Arindam Chakraborty says the central bank is confident food inflation can stay low, and he sees the policy rate settling at 6.0% by the end of 2024.
The BSP cut its policy rate by 25 basis points to 6.25% amid concerns over weak private consumption. It remained confident about inflation easing in the coming months as lower import tariffs on rice take effect and help drive food inflation lower. Led by this optimism, the BSP believes that it will be able to cut its policy rate by another 25 basis points this year.
Arindam Chakraborty there. Now in our bonus deep dive interview, ANZ FX analyst Kausani Basak talks to my colleague Alex Tarrant about the latest PMI data out of Asia's economies and reveals who's doing well out of the AI-linked manufacturing boom.
The S&P Global Manufacturing PMI for July showed a steady expansion in manufacturing activity in emerging Asia, excluding China. The region's manufacturing activity has been resilient compared to US, Europe, and the rest of the world. Now, within the region, South Korea, Taiwan, and Vietnam were the strongest performers in July. All of these are technology-related manufactured product exporting regions or economies. The artificial intelligence-driven technology demand was the main push for Taiwan and South Korea's manufacturing sector. India also registered solid manufacturing growth in July, and its manufacturing PMI index has remained in the expansionary territory since mid-2021. So these are broadly the best performers in the region.
And how about those economies that performed less well? Were there any themes across them, or did they sort of perform less well for their own reasons?
Reasons for a disappointing manufacturing performance differed among economies. In Indonesia and Philippines, which are primarily domestic demand-driven economies, manufacturing activity has moderated due to elevated interest rates. Now, in case of Malaysia, the output moderated in July as new orders have been weak. It is also an electronic and electrical good exporter, but has not benefited much from the recent tech rally. This is also a reason why Malaysia's activity has remained weak. But now we can see some new export orders are improving, though at a slower rate, which could help drive Malaysia's manufacturing activity upwards.
Now, there's been some divergence you've noted recently between the export drivers and domestic drivers for manufacturing demand across many of these economies. Is that gap closing, and whereabouts is it closing the most, if it is?
We see domestic manufacturing demand improving in some economies. The difference between the new orders and a new export order captures the estimate of domestic demand. In Vietnam and Taiwan, the gap between the two has expanded in recent months, indicating improving domestic demand. In South Korea, the gap has turned positive, though it is much milder. Strong export revenue in these economies has likely boosted the domestic demand, which affirms our view that the trade-dependent economies will be better regional performers this year. In India, domestic demand remains strong despite a moderation in the pace of expansion. Now, in Malaysia's case, the gap between new orders and new export orders has remained negative, as export orders has performed better than new orders. For Philippines and Indonesia, the slowdown in domestic activity reflected a narrower gap. An elevated interest rate and the absence of other strong growth push will likely keep domestic demand in both these economies muted for rest of the year.
Kausani Basak there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, August the 16th. Get you next week for the RBA's August meeting minutes and a host of PMIs. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.